Hello everyone, and welcome to the USG YouTube channel. Today we'll be conducting our first weekly macro outlook. We'll be going over approximately 8 to 10 financial markets, including commodities, forex, and US indices. We will also take a look at several macroeconomic data points. First, we will start with a recap of the previous trading week. Then we will go over recent market headlines. We will then move on to our outlook for the upcoming trading week. And finally, we will analyze trading charts on a technical basis. This video is being recorded at 5:40 p.m. on October 8th, 2023. All opinions and information provided in this video are solely those of the creator. This video is not to be taken as financial advice. Trading involves significant risk. So, welcome everybody. Hello again, and thank you for tuning in. Welcome to the first weekly macro outlook on the USG YouTube channel. So, we will start here on forexfactory.com, and we will take a look at the previous week's news releases for the most impactful events that impacted the market last week. So first off, Monday, not much. You had ISM manufacturing PMI from the US and a speech from Fed Chair Powell. In Australia, you had cash rate and rate statements. CPI for Swiss came out on Tuesday. New Zealand had their cash rate as well. On Wednesday, the U.S. ADP non-farm employment change came in at a very shocking miss. The number forecasted was 154,000. The print we got was 89,000. So definitely a decrease from the previous print of 180,000. You also had ISM services PMI come in right as expected, so not much there. Moving on to Thursday, as a recap, you had weekly unemployment claims came out just below forecasts, but a tick higher from the previous week by 2,000. Moving on to Friday, you had CAD employment change and unemployment rate, and the big one here, your U.S. news. You had average hourly earnings month over month, non-farm employment change, so NFP. The number forecasted was 171,000, as you can see right here, and the number printed was 336,000. So a massive beat, and especially a increase from the previous month. And then finally, the U.S. unemployment rate, a tick above economists' forecasts, but stayed at the same level from the previous month. So no change in unemployment rate. We will be looking at unemployment rate a bit later. And along with this, you also had major news like from out the world. The biggest one that stuck out to me was kind of the Bank of Japan intervention, which we will be discussing more in depth later when we go look at charts. So moving on from Forex Factory, let's just jump to trading economics. Let's start here with some headlines. U.S. economy creates many more jobs than expected. And here we go again with that blowout number, 336,000. U.S. wages grow steady at 0.2%. Canadian economy adds the most jobs in 8 months. So a potential bullish indicator in Canada. U.S. 10-year Treasury yield rises to 16-year high. So we will be discussing the U.S. yields further in depth later in the video. The current level of the yields are high. You can see 4.8% right here on the 10-year, and then the 2-year is definitely above 5% right now. So we will take another look at those later. Last here we have India leaves rates steady as expected. So India left their rate unchanged at 6.5%. And you can see here India is still at 6.5%. US 5.5%. Okay, so from there let's jump to CNBC. Gotta go to world markets. Just 1 minute here. Okay, so CNBC World Markets. Let's see some headlines. US dollar eases after blowout jobs number. Gold attempts to rebound. Gold attempts to rebound but heads for second weekly dip on rate hike fears. Oil prices rise but post the biggest weekly fall since March. Okay. Asia Pacific stocks trade mixed ahead of key US jobs data. Oil prices tick up after OPEC panel maintains output cuts. And more US dollar gold news and some yen news. Fragile yen is flat as intervention talk in focus. Okay, so next let's move to Bloomberg. Bloomberg Economics. Rate cliff awaits global economy after higher for longer plateau. David Dollar, China scholar and former U.S. Treasury envoy dies. Okay, that's fairly recent. GM faces labor woes in Canada as union seeks deal like Ford's. Okay. No signs of soft landing on Bloomberg's trade tracker. Okay, that's interesting. The free money experiment is over. ECB's Lagarde says IMF has cut global growth forecasts except US. Interesting. More information from Lagarde. And let's check Bloomberg markets here. Okay, so global markets face new geopolitical risk. View oil as guide. So yes, Metro Holdings reaches 925 million financing deal with investors. Dollar climbs as traders seek safe havens after attack in Israel. More Israel-Hamas war rages. Oil traders focus on Iran. Metal trader misery undercuts supercycle hype as losses pile up. And Philippines raises $1.3 billion from retail dollar bond sale. Interesting. And then we have some Birkenstock IPO news from Reuters. The federal deficit is out of control. The debate. Yes, okay. So those are some headlines. We have a lot of dollar news, oil news, Asia news, gold. So let's take a look at the CFTC S&P 500 speculative net positions. So this data is released every Friday from the Commitment of Traders at 3:30 p.m., so 30 minutes before market close. And we can see here that the most recent print on October 6th, institutions, they continue to reduce their positions. They reduced by a lesser amount than the previous print, but still they're reducing by 73.2 thousand. So this can be taken, I would say this is slightly more bullish than bearish, but it just depends. And you can see here, institutions, they've been continuously decreasing their net positions since like June, so mid-year. They've been, like I said, continuously decreasing their net positions. So take that how you want. We'll just have to see how price reacts on the chart. But this is always good information to have. Okay, next we are going to look at the upcoming news releases for this trading week ahead. So it should be another busy week in the markets. It's the second trading week of the month. So Monday we have ISM manufacturing PMI. Oh, I'm sorry, this is the other week. Okay, now we're here. Okay, so back to Forex Factory. The upcoming news releases from this week. Monday, we kind of have a slow day, not much, but we do have IMF meetings this week, so that's very important. So just in case you guys are unfamiliar, if anybody watching is unfamiliar with the IMF meetings, here's a quick summary from Forex Factory. IMF meetings are usually held twice a year and are attended by the representatives of IMF and the World Bank. Meetings are open to the press, and officials usually talk with reporters throughout the day. A formal statement covering policy shifts and meeting objectives is released after the meetings have concluded. Both the comments and statements can create market volatility. Okay, so that's something to be aware of. You have IMF meetings all week. Moving on to Tuesday, you don't have much data. Data from Japan, China, M2 money supply, Fed speakers from the US. Wednesday, moving to Wednesday, you have PPI month over month and core PPI month over month. Building permits from CAD, that'll be interesting. And you have meeting minutes, more Fed speakers and more IMF meetings. So Wednesday will be a busy day for sure. Japan PPI Japan PPI year over year. Some interesting data coming out of Japan as well. Bank lending, core machinery orders month over month. So very important. And then moving forward, Thursday, you have Great Britain GDP month over month. Forecast is 0.2%. A lot of pound news, a ton of pound news. USD news, core CPI month over month, CPI month over month, CPI year over year, and weekly unemployment claims. So this is another big day, Thursday, 8:30. So before market open, 1 hour before market open. And then Thursday night, you have some important data coming out of China: CPI year over year, PPI year over year, trade balance, and USD denominated trade balance. So very important information we'll be looking for on Thursday night coming out of China. And then finally, moving on to Friday, we have some governor speeches from Great Britain and, of course, University of Michigan consumer sentiment. So also very important data coming from the U.S. on Friday. Once again, IMF meetings are continuing all week and throughout the weekends. So now let's read a summary week ahead from Trading Economics. In the United States, attention will be on the inflation report, FOMC meeting minutes, speeches by Federal Reserve officials, wholesale price data, and the Michigan Consumer Confidence Index. It also heralds the start of earnings season with major companies like Citigroup, JP Morgan Chase, BlackRock, United Health Group, PepsiCo, and Delta Airlines reporting. International focus will be on inflation rates in China, Mexico, India, Brazil, and Russia. Additionally, China will release its trade balance, PPI inflation, and new yuan loans data, while the United Kingdom will provide monthly GDP figures. Australia will reveal Westpac consumer confidence and NAB business confidence data. And Germany will share insights into its industrial production. Okay, so that's a week ahead summary from Trading Economics. And finally, before we move into charts, we are going to look at the FX Outlook report from my FX book. So let's look at GJ. So we can see here that GJ is being heavily shorted by retail, 74% short compared to 26% long. Okay, so that's interesting. I want you guys to keep these numbers, keep this data in mind when we go look at charts, because it will be very important. Again, GJ, let's see, GCAD, they're about even. Long is 54% compared to short at 46%. So retail traders are pretty much even on the pound CAD. Moving on to GBP AUD, let's see right here. So pound odd, similar to pound CAD, retail traders are kind of stuck in the middle. Short is 44%, long is 56%. And let's see if we can find gold here. I just saw it. So gold, very interesting here. Retail traders are 71% long on gold compared to 29% short. So retail is heavily short, retail is heavily long on gold right now. So very interesting data here. Okay, so, and then back up here, I want to find GU, find a couple majors here, right at the top. So GU is heavily long by retail traders, 62% versus 38% short. Same with EU. EU is heavily long by retail. So retail is shorting the dollar. They're shorting the dollar all over the place. They're shorting it on currencies. They're shorting it in the gold market. I mean, UJ, look at UJ, 77% short on UJ versus 23% long. And regarding the yen again, I mean, retail is heavily short the yen all over the place. EJ, 81% short versus 19% long. The average short is 151, 500 pips away. So yeah, these yen pairs are extremely volatile, 500 pips away from the average short. So this is the FX outlook from my FX book. So okay, so we are going to hop into some charts now. Okay, so real quick before we just get to charts, one last report that was released recently. Very interesting report from the BIS on the banking turmoil from 2023. This report was just released on October 5th, so 3 days ago. So this is a very interesting report and definitely worth a read. So now let's jump over to some charts. Okay, so the futures market is now currently open because it is 6 p.m. Eastern Standard Time. But we are going to analyze these markets. So we'll start off on the dollar, a weekly chart. A monthly chart here. We're going to start monthly charts. Overall, and I'm going to have to get my other dollar. I'm gonna have to get my other dollar. Okay. So we can see here, monthly chart, I don't know, kind of looks like the dollar's on a major downtrend, you know, since 85, right? I will say, I do believe that, let's get back to the dollar first. Okay, now starting off with the dollar, the king dollar, as they call it. I do believe that this chart is very important right now. This chart is the topic of conversation: oil, gold, dollar. That's what the headlines are about right now. So let's talk about the dollar. Monthly chart, I already said we're kind of on a downtrend since 85, right? Here we have a massive range, pretty much. There's a lot, speaking of ranges, there's a lot of ranges in this market right now. Not the dollar, the global financial market, there's ranges all over the place. So regarding the dollar, we had a range from 2015 to 2022, a 7-year range, okay? So we broke out in 22, we retested the breakout, right? So this is monthly again. This is the monthly breakout. Just so you guys can see, it's just a different color. This is just a monthly consolidation. You can see it's consolidating, 7 years. Boom, okay, broke out. It retested the breakout this year in July. So we'll get rid of that. Retested that top of that level right there. Now let's scale down to the weekly. So we had our level there. It got tested perfectly. Just dipped right into it and popped right back up. So this was a pretty nasty, aggressive move. I mean, the dollar shot up to 114.86, didn't even touch 115, shot straight down to 100, pretty much on the dot. Oh, we're getting a couple of alerts right now. Pretty much shot down 99.50. Perfect double bottom right at the weekly 200. Shot right back up. Didn't even give you a chance to get in, really. And then most previously, from the previous trading week, we have a pretty nasty rejection of this structure right here, the 107.33 area, and we have a rejection. So what will this week do? We'll wait and see. Let's go to the daily. Let's scale down to the daily chart and see what we can find. So on the daily, you could see we still have a clear uptrend on the dollar. Clearly a daily uptrend. Little rejection from that level. Let's see how price reacts to this trend line. If it breaks, then we will see how price reacts to this daily 200. We have some structure here, so I would say you're bullish on the dollar above 100. You're bullish on the dollar above 105. So we may get a tap to this 200, fake out breakout of this trend line, and just push right back up to 115. There's a loud plane going by. So yeah, maybe a possible breakout, fake out, tap to 200, and go back to the highs if you're bullish. Or you could wait for a retest of 100. I mean, I don't think 100 will get retested and bounce, considering it already had a weekly double bottom at 100. I don't think you're going to get another test of 100. So 105 will kind of be a nice area to start looking for buys. But buys could be as low as 350, 103.50 or 103. So that's the dollar. Overall, we remain bullish. Yes, we remain bullish on the dollar until further notice. And then also here, last thing, you can see a nice range here pretty much. So touch to the highs will be a breakout of this range as well. So we will see. Moving on, let's go to US indices. We will start with the NASDAQ100 monthly chart. Okay, just for perspective, we are on the monthly chart here. NASDAQ100, a bullish instrument by nature. This thing just goes up. This thing is very bullish over time. It tends to go up. So monthly chart, we have a monthly lower high here. So we're kind of creating something here. Yeah, we're kind of creating something here on the monthly, and then even weekly, you have that lower high again on the weekly. You did break the structure temporarily, but you came right back down, closed below it. The previous week closed right below 15,000. So at this current point, it's making this kind of descending channel or flag pattern, whatever you want to call it. Let's go down to the daily. So you did have a bullish day on Friday, okay, and I also want to point out this general area right here. Let's see. I don't know. Yeah, this area right here. These were Jackson Hole buyers. They bought price that day Jackson Hole. The Jackson Hole speech happened, so they bought price and pushed it up to 15,600 and pushed it right back down below 15. So these buyers most likely bought again on Friday. Are they gonna push it up here? This is if I'm gonna sell. So let's come up with some ideas here. So buys, if you bought Friday, I mean, good job. You're still in buys probably. I would be looking to take profit like right around here, 15,250 or as high as 15.5. Yeah, 15.5. If price gets to 15.5, that'll be again another like breakout, like kind of breakout, fake out thing. Let's see if we can get a drawing tool here. Oh, I can't find it now. I can't find the pencil because I rarely ever use it. Let's see. Yeah, I should have found that already. Here we go. It's right here, brush. It's my favorite. Okay, it's on my favorite toolbar. Okay, so you could potentially have like something like this. A break, take that down, retest that, maybe lower high, and then back down in here. Possibly, that's a possible scenario for the NASDAQ. Can't delete this. Okay, so that would be a possible sell scenario for NASDAQ. And then if you're going to sell it up here, let's do a potential trade setup. Sell it in this general area at the trend line. You're short. I don't know why I can't see my short position. Something's going on here. Okay, here we go. We're back. We're back now. Okay, so possible scenarios. Let's get back on track here. I don't know what's going on. Okay. Overall, I'm bearish the U.S. indices. You know, that while the dollar is elevated, yields remain elevated. I think there's no reason for equities to be this high up here in these areas. So yeah, I would sell it. Definitely sell it bearish below 15,000. If I'm looking for sells, I would sell in this area right here. So see how price action plays out. A stop definitely above the trend line and above the most recent price action. If it happens, you could set up something like this to the lows, or 14. Could target 14,000, the bottom of that channel. So that's about a 1 to 3. So not terrible risk to reward. You could tighten up your stop and play with your take profits, increase your risk to reward. So that would be a sell setup for NAS. Let's look at a buy. So if you're not in buys already from Friday, or if these buyers get taken out and price goes to the 200 on the daily, yeah, I would be looking for buys down here. 14,000 I would buy. Yeah, I would buy right here. Stop. I would have a tight stop on this one, and then I would just target the top of the channel, or 15,000, about 15,500. Again, that's a nice. Excuse me. That's a nice 1 to 5. If you're going from about 15 to 50, it's a nice 1 to 5 risk to reward. If you got out at 15, which would be good, 1 to 4 even. So it all depends on how price action plays out at these levels. So there's a buy and a sell scenario for NASDAQ. One other thing very quickly is the NASDAQ is actually in a pretty disgusting area. I mean, along with the dollar, all the markets are in interesting areas. So if you do a fib from 2020 low to the 2021 high, you could see that it actually did a golden zone retracement. So that's the October low. So that's the October low that everybody was talking about. You know, will the October low hold? Will it get taken out? You could see we had a nice bullish move up, but currently and over the longer term, it's kind of my opinion that we will just remain choppy. You did that retracement. You failed so far to make a higher high. So I'm pretty much, again, it's my opinion that we will stay in this kind of range here. That's kind of what I'm seeing. Even if you dip lower, like the high here barely touched 17,000. It did not touch 17,000. It came within 200 points. Even the low here came within 500 points at 10,000. So it didn't hit 10,000. So I think 10,000, that's obviously a huge number. If it gets to 10, we'll see what price does. But at that point, that would be a pretty ugly chart if it gets to 10,000. I mean, if it gets to 10, I think, yeah, I think you're going to stay in this area for a while. I do not think you will touch 2020 lows. I don't think that. So let's move on to US 30. So US 30. So US 30, kind of similar to NAS, kind of looking for sells. You have this, you know, you have this channel here, whatever you want to call it, ascending, kind of have an ascending channel here on US 30. Let's go to the monthly. Again, just looking at the monthly just to show that this is a bullish instrument, kind of by nature, you know. I mean, this thing just has a tendency to go up. And again, we have a lower high on the monthly chart, weekly chart, high, lower high. Yeah, you failed to break the highs so far this year. You had a pretty nice, this is a big area, but it's a really nice area on US 30. You can see it pushed into it and then broke back down, wicked on the weekly. We're on the weekly chart now. So this level right here, let's see. So yeah, this level right here is pretty aggressive level. You know, price touched this trend line and price touched the trend line and wicked back up on the weekly chart. So let's see, let's go to the daily, US 30, delete this line. So yeah, we still have a ascending channel on the daily chart. We are below the daily 200. So if you're looking for buys, I would buy on the weekly chart. I wouldn't buy on the daily chart. So I don't think price will get down here this week, but a longer term buy for me would be somewhere down here at the 31.5 level, 31,500 for a much longer term buy. If I go down to the daily, I'm looking for sells on this thing. Okay, so there was a pretty nice M. Look at that daily M breakout on the daily chart at 35,000. So I'm looking for sells below 35,000. Above 35, I may go bullish again. Just right now, it's looking kind of bearish, very bearish for U.S. equities in my opinion. I can draw a fib right here from current price. If it holds, a retracement to the golden zone looks promising. I could do a potential idea here, depending on how tight you want your stop. It just depends, but you know, definitely want a decent sized stop loss here. But if you get, say I would short at 34,000, short at 34, and then target the lows. So you have a nice 1 to 3 risk to reward. Again, depending on how you want to place your stop. And like I said, it all depends on how price reacts at these levels. We don't know yet. So these are potential ideas. You know, they're not set in stone. We don't know what's going to happen. We're just waiting to see what will happen. If price gets here, then I will do this. So that's kind of what we're looking at. And again, you're below the 4-hour chart here. You're below the 200. You had a nice, again, here's that range. Again, you have a nice range right here. Nice breakout and just push straight down. So even on the 4-hour, push back up will just be a retest of this range right here. Here's the range low. Kind of like that, if you can see that. That was your range. And we need a retest of that range. So take that liquidity and sell back down. And then break out of the trend line. That's what I'd be looking for on US 30. Next, let's go to gold. Now, gold is very interesting. So the market is open. The futures market is open. You have a huge box here. I think this is something on the monthly, yeah. So, gold on the monthly chart. Bullish by nature. Gold is bullish by nature. You know, we know gold. It's really the only thing that has value. So we're always looking to buy gold, either physically or a CFD, as a long-term investment. So here on gold, we saw the monthly. Let's go to weekly. This is, I just have this big box around here just to show you guys this it's pretty much a range as it sits right now. You have a triple top right here, and then you have a range or a low at triple bottom at 1600, and then triple tops around 2000. So you're currently in the middle of the range as price sits currently. And like I said, the futures market is open, so we have a little bit of price movement, but nothing I'm really paying attention to right now. Just analyzing these markets, getting prepared for the week. So let's see. Yeah, gold looks pretty sick. I mean, you have a nasty double top here again, right at 1950. So I was waiting for gold sells at 2000, but never got there. Just barely touched 1988. So gold sells at 2000 did not happen. You had to sell it up here. Another interesting. I have to hop back to the weekly. Another interesting thing about this last triple touch, this third touch up here at 2000, it actually broke both previous touches. So it wicked higher and then just broke right down. So this could just be a sell all the way down back to the lows. It could even break the lows. I mean, we have to see. I am bearish on gold. I mean, let's see here. So I'm bearish on gold right now. So let's set up a couple ideas. So potential buy, I already have it set up here. You know, with this one, I'm kind of just looking for a quick liquidity grab of this, because we're on the daily chart here. We didn't wick under this level yet, like around 1800. So I'm looking for a quick wick below 1800 and a quick buy. I would have a fairly tight stop. I wouldn't make that my stop necessarily. It would depend on price action. That stop looks decent. It's kind of wide though. It's very wide. Yeah, we'll have to see. But it's like about a 1 to 3. It's like a 1 to 3 risk to reward if you're gonna buy it below 18 for a push. Hopefully pushing back to 1950. So yeah, like a 1 to 4 risk to reward actually for a buy. But currently I wouldn't buy it. I would not buy it right now. I'm waiting for buys below 18 just to push back up to 18. And again, we're in the middle of the weekly range, monthly range, so buys are possible. When it comes to sells look beautiful right now. So this is the daily chart. Let's go to the 4-hour for some sells. Gold sells, yeah. So selling it, I would go 61 and you're at that 200, so right around this area, like let's just say 1900, you get an entry. I'm putting my stop above here. That's my stop, and then I'm going for 1800. That's my target. 1800 if this plays out. And yeah. So that is a 1 to 3, so not bad risk to reward on that either. So gold is a nice chart right now. It's one of my favorite charts right now. It looks pretty good for either buys or sells. We'll just have to see how price plays out. And last thing, you can see we're above the weekly 200, so even a buy at the weekly 200 will be nice, which is again below 18. So a wick and then buy back up will be nice for gold. So let's move on to oil. Now, I don't trade oil, but I know it's been in the news a lot recently, and it's had a pretty nice bullish run, so I kind of want to discuss it a little bit. So let's go over to the monthly chart, and you see here, oil there's really no direction on the longer term charts. Most recently, we did have we've had a nice push up since 2020. Leading into 22, March, and then pull back down. So back to the weekly, I have just two levels here, and then we had a range here, okay? First of all, we had the nice push up, a retracement to the 200 weekly. We had a range, and then we had a breakout. So previous price action, the close last week, was a close back in this range that was started pretty much in November 22. So we did close in that range. Okay, no, it didn't close in the range. It barely closed outside of it. Depends on how you look at it, but it's pretty tricky. It's interesting how they closed the price on oil right there. I was thinking I'm bearish below 85. Yeah, definitely bearish below 85, and then bearish below 100 for sure. So currently I want to be bearish on oil, but if you're looking for buys, honestly, let's go to the daily. I would have to be in buys right now on oil. I wouldn't really be looking for any other buys. If it comes to 80, I guess I'll see how price reacts and, take it from there. But if, just to give a general idea of what a gold buy, an oil buy may look like, if it holds psychological level of 80, and you do have a double bottom on the daily, so that area could hold. You have a tight stop on oil, and then I'll target 100. So you have a 1 to 6. So this is a phenomenal trade if it plays out. I'm not really an oil trader, so I really won't be looking for this trade, but just technically, that's how I'm looking at it. And 100 is my bullish target, and 65 is the bearish target that I have right now. So that is oil for you. A short at 100 would be nice, probable. Let's see how price action plays out when we get to this level. But for right now, we've already discussed our opinions. So let's move on to currencies. So pound yen, of course. So the yen. Let's just briefly talk about the suspected Bank of Japan intervention. So this is the JXY, right? We're on a daily chart. I believe this was the day of the intervention. Right here, you had a pretty weak reaction to the suspected intervention. Only 1.8%. Last intervention by the Bank of Japan, I remember, was this day. Price shot up 4% in one day on the JXY, so that was a clear intervention, and then it had followed through, for what, the next in the next 3 months, 2-3 months. So you have follow through. I didn't see any intervention here in this previous week. I saw no intervention. Especially I saw how price reacted on the currencies. I mean, price immediately retraced its initial move. So that's not signs of an intervention to me. So we're back on pound yen. We're on the monthly chart. Now, this thing is a monster. I mean, they don't call this the dragon for no reason. So overall, this chart is bearish. Obviously, we are so bearish from the 80s, 70s, 75. You know, long term, we kind of have another range here. Like, I feel like we're kind of just range bound from 116 to 195, right? Going back to the weekly, I'm bullish on GJ until further notice. Just seeing how price reacted last week, it made a nasty wick right here. And then that's not the first time it did that. It did that over here too in July. It made that nasty wick. I mean, these wicks are 200, 300, 400 pips, 500 pips on the wick. Okay, so previous week on the wick, 400 pips. So, and that 400 pip move happened in like about 5 or 7 minutes. So it was 1 5-minute candle on that wick. But you had these nasty wicks. So I'm extremely bullish on GJ. Above 180, I'm bullish in this, this really hasn't formed yet. I mean, the market is still forming, but this ascending thing, correction, I'm bullish on this. I would actually be looking for buys at 180. 180, I'll be looking for buys. And, long term, I am bullish on GJ. I think this thing I think you can see 200, in no time. Well, I think you'll see 200 soon. I think you will see it. If not, this year, then mid next year, you may see 200. Yeah, early next year, mid-year, I think you'll see 200 on GJ. Especially if, the Bank of Japan maintains their loose monetary policy and maintains negative interest rates. I think we will be selling the yen even further. And even buying the pound. The pound has been extremely bullish, which we will see more of that later. So GJ, again, daily chart, we got to scale down here because these candles are huge. So this is why I like the 180 level. So you have a pretty decent area right here. I can't see. Move that. So you have a nice, decent area right here. If you're looking for buys, I mean, I would have a nice tight stop, a nice 50 pip stop. And I'm going for the highest, 200 on the 4 hour. Excuse me. I'm just going for the 200 on the 4 hour. So this is again another 6 to 1. So if you're patient, if you wait for this, it might play out for you. A nice. Again, we go down to the hour chart at this point. So a nice wick below this area, 180, and then push back up. I could definitely see that playing out. And then from there, if we want to be short on pound yen, that was a nice long. If we want to be short, I wouldn't really be shorting until back up here at these prices. I wouldn't short. I would not short in between. I'll draw a box here and then current price. Like this area is like no trade zone basically. I'd only be shorting at the top of this box, like 186. Let's see how that looks on a weekly. So I'd be shorting in these wicks again. 4 hour. Yeah. Shorts up here at 185. Potentially. No, I don't even like that level. I don't like that level. Not even 185. So shorts on GJ, we will just have to wait and see how price action plays out if we're going to consider a short, because this thing is extremely bullish right now. and I don't want to get caught on the wrong side of this trade. I was in an EJ. I got stopped out on EJ last week, so I was in the wrong move. But it's okay. So bullish yen crosses. GJ, EJ, CAD-J, bullish all the way. So let's move on to GA. Okay. Now GA, let's start on the monthly again. GA. This is a good pair. It's extremely volatile. It moves big. So overall, I don't know. I would say we are either bearish, monthly bearish, or no direction really. Again, we kind of just have a choppy market here since 2016. Not really doing much. I mean, it was really bullish over here, but then bullish again now. So, let's go to weekly. We're above the monthly 200, by the way. We're above the weekly 200. So that's bullish. So weekly is bullish. So you can see on the weekly. Let's scale out again. The weekly is where it looks a little bit more bullish to me. Which chart was that? Okay, well right here, so got to push down and then push up, high or low, ripped up, broke the high, made a high, pulled back, and now we are at this level with these weekly wicks. So let's go to the daily chart right now. So you have a wick right here. I love this level right here. So if we're what's this, a sell? So we have a potential sell. All right, let's talk about the sell first, I guess, since it's already up here. The potential sell that I would be looking for, and it's not here yet, and it hasn't played out. So I need to see price action at these levels again. But I would potentially be looking for a sell at 1925, around that area, about close to 100 pip stop loss. And then I'm targeting close to 500 pips, so another 1 to 6. This trade is, it may not be probable right now how the chart looks. You could get a much higher retracement to, these levels up here around 95 even. 195 would be a better short if you're patient enough to wait for that, like 500 pips away. So it all depends. If you can wait to 95, if price gets there, then yeah, of course, short at 95, and then you have a beautiful trade right here. A beautiful trade back down to the lows, and then again, the short in these areas, the recent areas. We'll see how price plays out though. So buys look a little better in my opinion. I kind of bought last week, so if you're in buys, price could go straight to 95 for you, and then I'll be looking for sells. But first, if price wants to rip back down to the 200, I'd be okay with that, and then I'd be looking for buys at that area. So if I do a long position here, 80, like 87.5 or even 88 to somewhere 88, even 88 right there on the dot. Again, I don't know where this stop would go right now. I would say somewhere around here. So about another 100 pip stop, almost 100 pip stop. You can go to 87 on there, and then buys will look good. I'd be a buyer till 95. So you have a beautiful 127 right here. This one's also going to take some time. This is a daily chart. So we will see how GAUUD plays out. Overall, I am long-term bullish on the pound. And yes, so we'll move on to pound CAD now. So we're on pound CAD. Okay, so pound CAD is also another beautiful chart. So this is the chart I was looking for. So pound CAD, here we go, monthly charts. Overall, seems like we're kind of bearish monthly. On the monthly chart, we seem pretty bearish. Recent price action, and I say recent as in 2016, we have a sick range, another sick range. So GCAD kind of has a tendency to range a little bit, break out. So right here is really interesting. I like this. So they had a range from 2010 to 2013. They broke it out aggressively, and then to like above 2, ripped it back down, ranged, ripped it back down, broke this range, and then ripped it back up. And now we're currently kind of in the middle of this second range here. So this push down, let's go to the weekly. So this push down, yes, this was the UK mortgage crisis. So then, price has been bullish ever since. It even pulled back. It pulled back below the 200 and then broke above it. So right now I'm extremely bullish on GCAD. This is like one of my favorite pairs, GCAD. So I've been eyeing this level, this most recent level, since kind of over here, March 23, like the whole year. I've been waiting for this level. You had a double bottom on the daily. There's a double bottom on the 4 hour as well. But then price just ripped up. You could get in here, but price had a nice uptrend. Now it broke it, ripped down aggressively, broke that low, and then popped right back up to it. Above the low, excuse me, like it's back above that range low on the 4 hour, on the daily, but you are below your 4 hour 200, which is no problem for me. I would still be looking for buys. So when it comes to potential setups, I need to see some daily structure be built here. The 4 hour looks really good. It looks like, I think we'll use the 4 hour for GCAD for today. You have a pretty nice uptrend here on the 4 hour. So you didn't quite get a third touch right there. Maybe you could, I wouldn't draw it like that. I would just draw my trend line like that. And then, right about now, a retest to that actual low is looking fairly promising. So 65, 165, I'd definitely be bullish. I'm definitely bullish above the zone, this H4 low, this line I have here. I'm bullish above, and I'm bullish above this rectangle box. And then the level is 165. I'm bullish above. So 4 hour chart, if we see kind of like what was that, the dollar, like a fake out breakout of this trend line. If I do a long position here, let's say we get a perfect entry right at 65. Okay, I would put my stop below structure. I haven't. Oh, that's a no stop loss or 65. The structure is right at 65, so I'm going right below it. Pretty tight stop. Like less than 50 pips on there. Less than 50 pips stop loss. And this trade, I'll just get out right at the 200. Call it a nice 1 to 6 again. So I have about 3 potential 1 to 6 reward trades setting up fairly soon for us. Hopefully within the month of October we get these trades, and yeah, we'll take it from there. As far as selling this thing, I'm not really interested in sells. Let me not speak too soon. So let's look at it. There's your buy. Sells, clearly, yeah, you want to get some sells too. You have opportunity to sell if it gives it to you. I would like to sell at like 1.7. I have to go back to daily. So let's see a retracement. Let's see if I draw fib, swing high to swing low, right there. We already tapped a 38. Golden zone looks nice. Even 1.7, a little bit above the golden zone. I would short it at 1.7 for sure. That would be a beautiful short. If we get the short before the long, I'd be happy with that. I would take both positions. So let's do a potential short setup here. Say again, we get the perfect entry at 1.7, which we like getting that. We like getting that stop is above the next fib level. Let's say, decent stop loss. Again, we will have to see how price action plays out. These are potential setups, ideas here, and then I'm targeting the low. Well, I would target 65 actually, and I would look to buy at 65. So 1 to 3. So that's also good. Fairly decent risk to reward. Okay, so that's GCAD. Again, GCAD, another one of my favorite pairs. GJ, GCAD. Definitely love the pound pairs. NASDAQ. So, excuse me 1 minute. Okay, finally we will look at a few macroeconomic data points. So, we will start off with the 30-year mortgage rates. We are making new highs. Okay, we're on the weekly chart. Let's go higher. This thing looks extremely bullish. Mortgage rates look very bullish. You had your low in 2020 at around 2.5. Straight up, ever since. We're at 7.5% currently. I personally think, my opinion is that this thing is bullish. This thing is bullish above 5%. I think you're gonna have trouble selling. I think you're gonna have trouble, not selling, but going lower on mortgage rates, above 5, and then 10. You got 10 right here, a nice level, pretty nice level on here. Even 8 and 9, like 8 to 10 is a good level on mortgage rates for a potential. Those are 1990 levels right here. But like I said, honestly, this thing is extremely bullish. And you even had a breakout. You see that clear breakout here. Can't really see that because of the MA. Well, okay, there's your trend line. Hope you can see that. MA is kind of in the way. Clear breakout of that pretty sick downtrend. Yeah, from the 80s. So you broke out of the downtrend from the 80s. We have yet to retest it though, so we will see. Maybe we'll get a retest to 5 or 4.5 and then wick back up. But that's mortgage rates. I am bullish on mortgage rates. I think there's nothing stopping this thing from going to 20%. 1980 levels. I think there's nothing stopping it. So let's look at the unemployment rate. I like this chart too. This is a good chart. It's very interesting. So just doing some analysis here. You also had a kind of descending wedge flag, but you broke out. You broke out of it in May of this year. You retested it at 3.5. And then you broke out of that range. You had a nice range between 3.7 and 3.5. So this area is prone to ranges. So we ranged here in 2019, and we ranged here in 2020 to 2023. So again, price broke out of that range, out of the 3.7 range, and then with the most recent data we got on Friday. So I believe this thing will remain bullish, and again, kind of waiting to see what happens, with the next print, because I want to see a break 4. If we get above 4 on unemployment, then yeah, I think we're gonna go to your MA right here, so like around 5%, and then from there, who knows? You could hit 10% in unemployment rate. So yeah, which is below 2019 highs, of course. Yeah, who knows? I'm just bullish on unemployment, just due to this recent price action we had here. I really liked how the levels here played out, and then the thing broke out of this trend line, so it looks nice. You also have the Fed trying to increase the unemployment rate. So the Federal Reserve wants a higher unemployment rate. So I think we're bullish on unemployment right now. But right now it's not doing much, so we're just gonna wait. So the yields, let's discuss the 10-year yield and the 2-year. So the 10-year is it's pretty nasty right now. You had a clear downtrend breakout, same with unemployment. Just obvious breakout of this decade, multi-decade downtrend. Clear breakout on the monthly chart, by the way. Monthly chart we are on. And it pulled back. You can call that a retest, I guess, of the trend line. It barely didn't touch it, but some may consider that a retest. And then push up, pull back. So yields well above the 200. I mean, again, I think, I think we're kind of in unprecedented. I think we are in unprecedented times here in the global financial markets. I really think there's nothing stopping these yields and the dollar from just going straight back to these 80 levels. These are 1980 levels. There's just a ton of inefficiency right here that I think the chart it needs to get back to these levels. So, because right now, we had that breakout. So maybe another pullback, maybe to the MA, to the 200 on the monthly, but above 4, you're gonna remain bullish. You had this nice range here, which is above 4. So we want to stay above 4 if we're bullish on yields for the 10-year, and then definitely if we start holding above 4 and then 5, I think we're going straight up here. I think there's nothing stopping it from going up here. With the dollar elevated, with the global equities either choppy or downtrending. I think there's nothing stopping yields from pushing higher. Same thing with the 2-year. By the way, the buy on these was nasty. It's been in a buy for 2-3 years. Same on the 10-year. 3 years on a buy, and the buy was just it was absolutely sick. Okay, so back on the 2-year, monthly, same thing. 2 years above 5. So yeah, well above your 200 is clearly bullish. I would again say 2 years a little different. 4% is kind of at the bottom of this range. So again, if you're holding 4 and you have monthly wicks right here, so 3 consecutive monthly wicks. So you're holding 4, you're holding 5. I think you're bullish. Current price is at 08, 06 levels. So what's stopping this thing from just going straight to 8% on the 2-year? I don't think there's anything stopping it. So clear downtrend, broken. I would like to see. It'd be interesting to see what happens to the yields, in the coming months and even next year. So those are yields for you. I just wanted to show you guys. I think these things are just extremely bullish. Let's go to VIX. So VIX, we're just gonna go straight to the hour because it's kind of hard to see anything on the higher levels if you're analyzing it. Let's see, actually, because I had some. Let's turn the drawings on here. Yes, this chart is messy for the VIX, but let's see if I could see something. Okay, so there it is. You have a pretty nasty trend line here. So yeah, I just want you guys to see this trend line for the VIX. Kind of started in 2017, tapped it in 2020, we tapped it in 21, and we broke it this year. So, but now we're back in the trend line. Pretty much we were, excuse me. The weekly closed out of it. It kind of just depends on how you drew your trend line. But we had a pretty sick rejection. Yeah, we had a nasty rejection of the trend line, the weekly 200, and then just look at that wick. So, I mean, this could be a fake out though with the VIX. 17% wick on the VIX. My goodness, for the week. This could be a fake out though. I mean, I wouldn't be surprised if VIX just closed that whole wick. You know, wicked right at 20. So I wouldn't be surprised if VIX just shot up past 20. You know, and then from there, I'd be bullish on the VIX from there. But yeah, we're just looking for some higher time frame market structure to be formed on the VIX. The daily, it's bullish. The 4 hour is bullish. I mean, you had a nice reversal here. Clear, clear down and then push up. But we don't know. Like the VIX is a monster. So like, yeah, right here we kind of have the same thing. A breakout below the 200 or a push below, and then had some equal lows, and then you shot up 70% in the VIX. That was in 23 March. So right here, kind of like the same scenario, shot up 61%. So okay, VIX could melt, like VIX could die as well. Like VIX could go to 10. You could see VIX at 10 if the market goes bullish. I don't know. I mean, you're also rejected the monthly 200 in the first week of the month. So there you go again. I don't know if that's gonna hold. I don't know. You're just gonna melt the whole month on the VIX, or are you just gonna close that wick? Oh, sorry. This is the weekly still. I'm sorry. Thought we were on monthly. But even still, I mean, we rejected that in the first week of the month. So are you just gonna leave that wick there, or are we gonna close it? But again, one more time, it's I kind of see some similarities in this most recent move with this one. Again, you wick below, or you have some equal lows here, then you push up above the 200, and then you kind of just fall. This instance, it did push up way higher, but this one didn't push as high. So VIX is the VIX. It's just here. We're waiting to see what the VIX does. Let's see. AU. Okay, so this is about it. This is gonna be our last chart, and I'm not really gonna analyze this chart. I just wanted to show everybody one thing on here. So we were talking about the October low earlier in the video. So AU, you can see it's October low right here, right? Well, first you have COVID low. So let's just play around a little bit on AU, and I don't want any drawings, so never mind. So yeah, AU, you had your 2020 low, bullish push, pull back, October low. This is the October low that everyone was talking about, that is holding for the markets, the equities markets. They're holding their October low currently. So will the October low for equities, be tested? We don't know. Will it be tested for AU? I mean, AU is pretty damn close to its October low. It looks bearish as it sits right now. It looks, disgustingly bearish. I mean, my goodness, look at this thing. I guess we will, no, we're not going to analyze it, but this thing is nasty. I was actually looking for buys. I did buy AU in this area right here. Caught a little bit of this move right here. It was nice. This is a weekly chart, by the way. So so yeah, AU is extremely bearish, and you have the dollar elevated. So I think AU is just gonna break these October lows. So will that be like a will the other markets follow? AU, will it break below the October lows, and then will it break the 2020 low? So we'll see. I'm gonna be watching AU very closely, not necessarily trading it, just kind of watching it because I want to see how it reacts to this level. So I think that will be it for the first installment of the weekly macro outlook on the USG YouTube channel. I want to thank everybody for tuning in, and if you made it through the whole video, I thank you again. I appreciate it. Again, all the information in this video are just thoughts and opinions, and please subscribe to the channel and like the video. And we will be doing weekly videos every week. We'll do a weekly macro outlook, and then we will do one deep dive. We'll pick one market to do a deep dive on throughout the week. So yes, that will be all. I'll see everybody in the next video, and thank you for tuning in.